Market news now. Global stocks hit 7-month lows as the risk of a wider conflict in the Middle East and the prospect of a long stretch of high interest rates soured sentiment at the start of the week that is filled with mega cap earnings as well as key data. Bonds were also under pressure as US 10-year Treasury yields hovered about 5%, pushing borrowing costs up across the globe and testing equity valuations. Meanwhile, the European Central Bank will hold a policy meeting this week. And while no hikes are expected, investors will be sensitive to guidance on future moves. Meanwhile, this week, the mega caps such as Microsoft, Alphabet, Amazon and Meta platforms will all be reporting earnings this week. To give us perspective on the markets, we are joined by Sean Dendere, who is the senior sales trader at Trive. Sean, thank you for your time this afternoon. I mean, given what I've just described in terms of the picture as we kick off the week, what's driving markets right now?
All right, thank you for having me. So what's been really driving the markets is the geopolitical risk with the war out in Israel and Palestine, which is basically giving, markets, let's call it a bearish sentiment. And then the second thing that's also really driving markets is the old age inflation and interest rates. It seems that the Fed is still planning on, increasing interest rates as we head towards the year end.
Right. Let's bring things locally for a bit. And, I was trying to understand the kind of share price move that we were seeing coming out of Tiger Brands after the leadership announcement changes on Friday morning that CEO Noel Doyle will be stepping down. What do you make of Tiger Brands' performance versus its peers?
All right. So Tiger Brands has, it's really struggled since post-COVID. And I think its peers are also struggling from a share price perspective. The only one which I think that is doing relatively well is Premier Foods, which actually works well for Tiger Brands, because I see that the CEO from Premier Foods is actually going to Tiger Brands next year. So it's been a tough market due to the fact that, the retail sector has been, been dampened by high inflation, high interest rates. And so the consumer is struggling, which has a knock-on effect on, our fast-moving goods companies such as Tiger Brands.
Sticking with the company's theme, we have Q3 earnings season already having kicked off about a week or so ago out of the US. What do you make of some of the data that's been coming through here, given the fact that we have been, distracted by a lot of these cross currents that are playing out globally? What do you make of the figures that we've gotten so far?
So looking at, the US earnings, it is still showing that the economy is quite robust to a certain degree. However, those earnings were quite mixed. So if we look at our big banks, most of the big banks in the US actually beat expectations. But if we go down to your mid-tier type banks, they are actually starting to slowly struggle. You can see that the benefit of the high interest rates is starting to wane off with, consumers not struggling to actually start paying their loans like we are also experiencing locally here in South Africa.
On that note then, which of the big companies are you keeping an eye on for the rest of this earnings season?
So I'm going to be generally looking at your big tech companies, so your Amazons, your Metas, as I think they've really driven the S&P 500 in terms of the S&P 500 value this year. And that will actually show us what direction we're going to go towards the end of the year, at the beginning of the year, because of the weight those earnings has been showing us this past year alone.
When it comes to what the market is pricing in on the back of some comments that we're hearing out of Fed Chair Jerome Powell, as well as the other Fed speakers, where we're trying to put into context their views, especially when we're seeing what's happening with bond yields. What do you think the market is pricing in here when it comes to, recession calls or even the inflation outlook going forward?
So, it really is a bit of a tough one, right? So if we're looking at the environment that we're operating in of high inflation and high interest rates, which technically our interest rates tend to have a lagged effect in terms of what they do to the economy. But looking at the US economy, we're still seeing a tight labor market. We're still seeing growth. So there is, I think we're a bit on the fence in terms of what is going to happen towards 2024. I do believe that there is still a high chance of a recession coming into some part of 2024. We just don't know when that will come through next year.
Right. On that note then, which is the bigger risk? The recession that happens a little bit earlier than expected, or the recession that happens at a later part of 2024?
I would think that the recession that happens earlier than expected, because we've literally escaped it quarter on quarter. So it'll be quite a surprise for us to suddenly see the US economy slow down early in 2024.
As we wrap up, are there any trends in the market over the past 6 weeks or so that have, piqued your interest?
So over the past 6 weeks, what I'm seeing is that, there has been quite a sell-off in the market if you're looking at our major indices. However, what is really thriving currently, and this is mainly due to, a high inflation, the geopolitical risk that we are seeing, is that people have actually started going back to the traditional safe haven asset of gold. So you'll see that the price of gold has been performing quite well. And then if we're even looking at locally, if we look at our gold producing companies, their share price is also, doing quite well under the environment that we're experiencing currently.
All right, Sean, let's leave it there. Thank you so much for your time. That is Sean Dendere, who's a senior sales trader at Tribe. And just having a look at the markets right now, we've got a rand that's trading at 19.11, and we have been watching that Brent crude price currently at 91.61. And as he mentioned, he is keeping an eye on some of the big tech names that are going to be releasing their earnings this week, the likes of Microsoft and Alphabet tomorrow. And then later in the week, we've got Meta as well as Amazon, but not forgetting those Q3 GDP numbers coming out of the US.